What's up, traders? Part 2 here from the two-part series, and today we're going to talk about how the float of a stock affects your intraday trading. Okay, traders, so if you haven't already watched part 1, I recommend you do go back and watch that. It discusses this chart and how shares are divvied up and traded on an intraday basis. So today we're going to focus on the remaining shares, which is the float. Now, from the initial public offering where authorized shares are actually issued, we will then have some of those, usually more than 50%, sent into the treasury. That will leave us with shares outstanding, then split into restricted shares, and then what's left from that. So say if we had 55% sent to the treasury, we had 35% up here restricted. Now what the restricted shares, again, go back and watch part 1, but this is just like your banks, companies that want to invest in this company and so forth. You know, they can buy shares of this public traded company through SEC filings. And then what we're left with, 55 plus 35 is 90. So we would have 10% of those shares are left as what is called the float. Now, when we're looking at the float, it's, pretty simple as far as figuring out what the float is. How we would do that, simply go to Yahoo Finance, as I described in part 1 as well. We're going to come down here and we're going to look at the float. So we got GE, and as you can see, they have 8.71 billion shares outstanding. However, there's only 8.69 billion shares in the float. That doesn't seem like a big difference, but, that's a big difference. That's 200 million? So when you compare that to something like the infamous AWX, their outstanding shares are only 3.19 million, and their float is 2.27 million. So as you can see, that's a pretty big difference. And we'll look at their chart in a second. But how does this affect the price action? So your price action on an intraday basis is going to be affected by two things, the two main things. And one of them is the float, and the other one is probably the more important one, because without this, a stock doesn't move, and that would be volume. So if no one's buying or selling the stock, it'll just simply stand still. So if the stock is standing still, how are you going to make money? Also, there comes the liquidity issue, which we'll get to in a second. However, if you see, I'll bring up the chart real quick. If you see 125 shares of GE, 125 million shares of GE being traded, which is kind of the average, just looking back to, into October, you can see that the range every day is not that large. Like here's a pretty big day, and the range was under $1. Right here, this was a bigger volume day. You can see this was 348 million volume, and it barely traded over $1 range. And a lot of this has to do with they actually have been in the news a lot recently, with possibly filing bankrupt, all that good stuff. So they actually have a catalyst for a lot of this extra volume as far as, the news goes. So what if you were to take that same 125 million shares traded within the day and put it on something like AWX? First off, that's not going to happen. We can scroll back here to November and see that we had only 4 million shares traded, and the price action was $1.80. So it was got about $1.80 in movement from high to low throughout the day. Now, if you want to scroll back, there was the infamous climb, but within these 5 days, you never had volume over 13.6 million. So in one day, we had 5.7 million in volume, and the stock went from a high of $20.20 to $6.01. Would that be possible with GE? The only way that's going to be possible with something like GE is if they declare bankruptcy and everyone, nobody's buying the stock and it just goes straight down. However, this did also have a little bit of a catalyst, but it just goes to show you how quickly something like this can move. And even if it was with GE, I mean, you're not going to get a move from, say, 20, down to 6 like that. I mean, you might get it from like 12 to 8. And the reason behind this is because of the liquidity, or, shares being traded, otherwise known as the volume, that the price action will suffer unless there's a major catalyst that could spark, the buying or selling to decrease dramatically in one direction. If there's a positive PR that comes out, it could skyrocket because everyone wants to buy. Oh, look, they cured cancer. Buy. No one's going to want to sell into that. They're like, oh, they cured cancer. This thing's going to go to the moon. So, everyone's buying and no one's selling, which, drives price action. And on a higher float stock, the odds are out of those 8.69 billion shares, there's going to be people that are taking profit along the way. So if they're constantly taking profit, it means the stock can't move as fast. However, on, say, something like AWX, now if AWX cured cancer, now if, say, 75% of those 2.27, I think, million shares, say 75% of them are just holding their shares because, they're thinking this thing's going to the moon now because they cured cancer. Now only 25% of that 2.7 million, so say 500,000 shares, are being traded. So if the next person in line, say the stock was at $3, the next person in line wants to sell it at $5, well, guess what? If you want to get out of that stock as a short, you have no option but to cover as it's going up, in those increments, because there's no liquidity. So the less liquidity that there is, the less that, it's harder to trade. And that's why a lot of people, stay away from low float stocks in general, because the price action is so volatile that, it can get a bit scary. I mean, you can jump into a stock here and it could be a point away. And by the time you look at one screen, look back, and you're down a point because, it's just the way low flow stocks can work. Been there, done that. I actually just did it with OCX not too long ago, and you can go back and watch that video. So what I'm getting at is, if you have those 125 million shares traded on something like AWX, the float can actually be traded 100% of the time, a little over 55 times. 55 times the float would get traded. However, if you're looking at GE, I could do the math real quick. $125 million shares of GE in a day is 0.014% of the float, instead of 55 times 100% of the float on a stock like AWX. So it just goes to show you that, trading on a low float stock, the liquidity can really drastically change, since there are 2.27 million shares of that can be possibly traded. So again, let's just go back to a quick example. I wrote this one down. So if 45% of traders are looking to go long, 45% of traders are looking to go short, and the other 10 are just holding on to their positions. It would depend on when these entries and exits are taking place, who's buying high, who's selling high, right? Who's buying low, who's selling low. This is where, you can grab some popcorn and it's actually fun to watch, because at any given moment, the stock could become a little bit extended. Like, say she shoots up, and we'll actually use GE's chart as an example, because you actually see this on low float stocks, but it can be 2-3 points at a time, whereas this was actually pretty good. What time frame am I on? I'm on the 15-minute chart. Okay, so this was like the all-day move back when they had the catalyst. Okay, but it'll look like this. So when it gets this extended, the buyers are, there's a lot of buyers, and, they're just done buying. They're like, okay, I can't buy up here. This is too extended. So the, short bias traders, they'll, see this and they'll be like, all right, well, the buyers are done. Our turn. So they'll jump in and they'll start driving it down. Once it starts coming down and the bulls start to see that the price is coming down, then they start to sell. So if they're selling while the shorts are piling in, this is what happens, and you get a big sell-off. So, and the reason that a low float stock will have drastic changes just like this, over and over again, is because the shares that they have available to trade, again, like if only, say 90% of people were trading the 2.27 million shares, technically 2.27 million shares, broken down, one person could technically own like 100,000 shares, So right there, that's one person that could dramatically change, the outcome of the stock over the course of, the next couple of minutes. So, where was I? Right. Okay. I had that written. I was just checking my bullet points. So when it comes back down like this, now this could essentially do the same thing in reverse. So when it starts selling, and it comes up and then it comes back down, and say it started forming a support line here, the shorts are going to be like, okay, well, I guess this is as low as we're going. I'm going to cover my position. The bulls are going to say, oh, I guess the shorts can't drive it down any lower. I'm going to buy back in and look for, push back up. And then sure enough, in, some cases, you can actually get what's called a short squeeze. So because when you cover a position, you're essentially buying shares back, from the short that you borrowed. So if you borrow shares to, get those back, you have to essentially buy shares or cover your position. So if you're covering your position, the bulls are now buying shares as they realize, there's a support line forming here. That's how, just like we had everyone selling and people shorting at the same time, now we have everyone buying and covering at the same time. So it works in both directions, and figuring out where these tops and bottoms are, to me, that's the whole key. So obviously, as you can see, this is on GE. This is on a 15-minute chart. If you want to break this down, let's go back to that day and look at it on a 2-minute chart. It's not going to let me do 5 minutes. Still not going to. I don't want to let me go back that far. Okay. I want to zoom in on the 20. So it's on the 25th. Okay. So let's see if it'll let me just do. This is the 15-minute. It's not going to let me, is it? No. Okay. So on the 15-minute, we'll just look at it on the 15-minute. Let's just zoom in a little bit more. So as you can see, at the beginning of the day, before it had its little catalyst, it wasn't really moving that much. This is very typical for a float with 8.69 billion in the float, because again, the higher float is going to keep the stock from moving drastically, because there's so many people trading, in that small range, that it's going to be hard for, say 100,000 share order to come through and really, make the stock, move. Whereas 100,000 order into an 8.69 billion float, it's not even going to make a dent. I mean, you can sit here and watch it. Those kinds of orders go through on these types of stocks all day. But in this case, you get a positive catalyst. Let's see. Well, let's just see what it says. We'll check the news real quick. 8:25, and this was actually at, it looks like pre-market, so 7 o'clock on 8:25. Okay, so just reading the headline, it looks like Danaher, I'm going to assume that's how it says they're to acquire the biopharma business of General Electric. So right there, that's your catalyst, and sure enough, look at what it did. Now, when you see good news like this, and this sounds like really great news, it says they're to acquire. It doesn't say they did, but it says they are too. So obviously things could fall through. But when traders see this, especially in pre-market, now pre-market, this move actually makes a lot more sense. I wasn't actually going to talk about this, but since it presented itself, I will. Even though this is an 8.69 billion share float, in pre-market and after hours, that means diddly squat. And this is why I don't play pre-market and after hours, because you can have super low volume on, a 50 billion share float, and it can move like this because the liquidity is not there. The volume is not there. I mean, obviously you can see the volume was here. Well, this is actually the first candle of the day, but the highest volume bar was 7.9 million in the pre-market. And look at all these other ones. You got 1.3 million. And this is a lot of volume, but not for such a big float. However, when you have a catalyst like this, sure enough, no one's selling. Why would anyone be selling into this type of, and this is probably a false reading. This probably didn't really happen. It was probably up in here somewhere. So you have a catalyst. No one wants to sell. Everyone's buying. In the pre-market, there's less liquidity, which, again, remember back, if there's less liquidity, say right here it was at $10.20, the next person, when they saw this good news, they're like, well, I'm not going to sell my shares down here at $10.20. I'm going to up it to $11 because that's really good news. So if there's no one that's willing to sell their shares in between $10.20 and $11, guess what? If you want to buy shares, now you have to buy them at $11. If you want to cover your shares because you were in short down here, you have to do it at $11. And sure enough, if it's great news like it was, people are going to keep buying as they're, okay, I guess we're going to keep going. Buy. And people are like, well, the shorts are like, crap, that was really good news. I better get out of this position. I'm already down a point and I have no choice. So, and that's what creates this. And if you notice, after the news, kind of settled down, the initial shock was over, people realized, okay, they're looking at the news, they're reading the numbers, okay, well, it wasn't worth $12. So we're going to, and obviously the whole dollar is always a nice, major resistance anyway, that, it started to come back down. And then sure enough, at the bell, people were like, okay, you know what? This really wasn't, that great of news. GE's, just trying to save ass. So sure enough, she fell down even further. And it's like, as you can see throughout the day, she kept falling because people realized, and as you can see, the news was obviously good enough to come up from where it was the day before, but it wasn't great enough to be up here. And as you can see, once we got into the intraday and all these people that were in here, that's what creates such a big drop here because, again, shorts piling in up here, and you have all the people that were, buying in here that are selling, and and then look at what happens. It levels out. And look at, this is a normal, typical, day, even with the news. Like, look at the range on these candles, 10 cents, 4 cents, and that's going to happen. And you're trading on these candles 6 million shares. That's almost 3 times the float of AWX. Remember that $14 move AWX? It made it on that amount of shares. And this thing moved 6 cents. I mean, right there, if that doesn't show you, how much the float matters, then I don't know what will. And I mean, to make these moves, look at what it had to, it was putting in 36 million in volume, 18 million. So this stock to move like that needs that amount of shares. And obviously this isn't a 15-minute period, but we're looking at AWX in a 15-minute period as well. So it goes to show you that it can happen with any stock, but obviously the chances of it happening on lower float stocks is way higher because of the less shares to move around. And I just had this analogy, or I guess metaphor, analogy pop into my head. But just imagine having to move 8.69 billion pounds of any kind of material from, say, point A to point B. Doesn't matter how long it is. Now imagine only having to move the float of AWX, which is 2.27 million pounds from that same point A to point B. Think of how much easier it would be, to move. You can move it back and forth, apparently, 55 plus times before you could move GE's shares one time, or, the weight of the stock. But again, the last thing I'd like to touch on is something I touched on before, which is the volume, liquidity, the shares being traded. Just because you have a low float stock, and we can even just use AWX's chart as an example, just because you have it does not mean that you'll see this price action, that you saw back here on November 9th, or all these days back here in July. The reason being is if you don't have the volume coming in, like I said before, the price can't move. So until there's a catalyst on these low float stocks, they're usually just going to do exactly what the daily is doing. And if you notice, basically it went sideways. And every once in a while, you see a little volume bar come in, and that's when you get your movement. Like right here, you see the volume movement. And look, now all of a sudden you had a $1.80 movement. But since that day back in November, look at what it's done. It's had no catalyst, no, fake PRs, no scandals, nothing going on. And it's pretty much just went sideways. And obviously this thing can move. So why doesn't it every day? Because there's no catalyst. And, and every once in a while you get pump and dumps. Those are a thing. We can do a whole separate video on those. Essentially, this kind of was one. But again, that's a whole different story. But as you can see, the volume is needed to make a stock move. And that's, again, look at GE. This thing does move a little bit, but look at the shares it's trading every day. Like, look at this, actually only moved a little over $1 with 348 million shares traded that day. So that's how the float affects the actual price action of your intraday trading. So on a larger cap stock like this, I mean, you're playing for pennies, as far as movement goes, unless you're swing trading, which I don't do. As an intraday trader, you're looking for volume, you're looking for volatility, you're looking for those quick moves for quick percentage gains. But with that said, I'm just going to leave you guys with that. If you have any questions or comments, just let me know down in the comment section below. Like and subscribe if you haven't already. Man, I cannot talk today. Speaking of which, if you've watched some of my old videos, as you can see, I have a new microphone. I got lots of different colors. Mainly got that for the kids. He's been singing in this thing since I got it yesterday. He loves it. But again, like and subscribe if you haven't already. Obviously, I appreciate the support, and I will look forward to talking to you guys tomorrow. Peace.